Head of Emerging Market Strategy at Societe Generale, joins us now on the phone line. Guy, appreciate you joining us. Well, the markets at this point in time continue to trend weak, trying to absorb the full implications of this result. How do you see this playing itself out over the next few days?
Well, I think that we have had a nice bounce over the European afternoon, really since you had a lot of statements from officials, and particularly central banks, saying that they were ready to add liquidity. Keep in mind that we are at the end of Q2, so the end of the first half of the year. That was going to make trading conditions very difficult anyway. And this hasn't, obviously, the UK referendum result has not made things easier. So I think we're not going to really get a clear picture in terms of the way valuations are trading until we get into the month of July. And we start to see more normal trading conditions at the end of the second quarter and then see a trend. I'm afraid that we've only seen about 1/3 of the correction that I would expect. I think the way you have to think about the move that we're seeing at the moment is what we'll see across a broad range of markets and risky assets is that we try and go back to the levels we were trading at the worst levels of this year, which is consistent with about the middle of February. So I'm afraid that's where we're headed for in terms of market performances.
Okay, so you believe we could be back down to the 2016 lows for the markets. But Guy, this is not going to play out over the next 24 to 48 hours. This is going to be a long, drawn process. So in terms of immediate cues, where exactly is the market going to be looking for direction?
Well, I think what we're really looking to see is, I think immediately, there are a couple of things. The first is, particularly in the case of the UK and Europe, whether we can move to sort of transparency and clarity in terms of both the UK domestic political situation and the relationships between the UK and Europe, whether we're going to get a clear path towards the divorce between the UK and the European Union, whether it's going to be an amicable divorce, whether the trade conditions are going to work out well. I think those are things that we're particularly focused on in Europe, and that particularly has an impact in terms of the European assets. I think in terms of the broader context, there's more of a discussion about trying to figure out how representative the UK referendum result is as a vote in favor of populism across a wide range of markets. So I think that that's really the issue that people are grappling with, whether this is a game changer in terms of global politics.
Yes, Guy, you really well pointed out it's political and social really causes and having a huge economic impact as we have seen across the globe today. Now, how much importance will you give to the central bank's actions going forward? Because the currencies all across the globe have also really reacted, and especially pound. Is that a cause of worry? And what are you watching out from either ECB or Bank of England or Federal Reserve going forward?
Well, I think the ECB is going to be the most interesting question, because I think we have the ECB, which is involved in a new program, as you know. It's called the CSPP. It's their commercial bond buying program. What's going to be very interesting is how much support they're lending to the corporate bonds, how much support they're lending to the corporate bond market, and what kind of effect that has on risk willingness, on people's willingness to take risk across the European markets. So I think it's there where it's going to be very important. I think in terms of the Bank of England, the statements they have made is that they're prepared to provide liquidity to the market, and that, in a sense, it's certainly didn't provide any support for the pound. I mean, when the Bank of England is providing liquidity, that's if anything, adding to downward pressure on the pound. So I think it's not so much on the currencies where you need to focus on the central bank activity. It's rather on what's going on in terms of rates market and what's going on in terms of more risky assets, corporate assets, which are going to be important in terms of people's belief in the credibility of a central bank response.
Right.
All right.
Go ahead, Nisha.
Yes. Guy, also one last question for you. So if money is going off the table, and today India has lost about 4 trillion rupees if we take the entire market cap that has been wiped off with the kind of carnage we have seen here. Is this overreaction in your view, you think? Or on the other hand, if money is going off the table, When do you think will be the right time to really enter? Are there any investment strategies in place right now, or is it all uncertain?
Well, I'm afraid that the weakness that we've seen today across a lot of emerging markets in general can probably continue. So I think that until we get a lot more transparency, a lot more clarity into how the situation plays out, we're going to continue to see weakness in terms of emerging markets. The trigger I would use really to see a turnaround in terms of markets would be valuation. But I think you're going to have to wait for quite a few sessions before you really start to feel comfortable that the valuations make sense.
Well, global risk-off is what we anticipate now, at least till we see some semblance of normalcy return to our markets, and that is a big question mark at this point in time. Guy Stear, appreciate you joining us here on CNBC TV 18. Well, as equities are in a tailspin.